Good evening, folks. This is Ruben Lisiaga, ChicagoGoldTrader.com, coming to you Tuesday, December 18th, 2012, late in the evening. Just a recap for today's trades and market reports. A lot of you have been asking me to do something a little bit more substantial than just publishing a chart, so I decided to do a video of three charts that are important in today's market. The first chart, let's go into it, was a short-term 2-minute chart of the gold futures. It was a winner for me. I got into it approximately about 8 o'clock, a little after 8, maybe 8:15ish in this area here. We had some weakness all the way from the overnight session. If you can take a look all the way back to 1 o'clock, 2 o'clock in the morning, nothing really happened. It was just stagnant there, waiting for the Asian and European markets to make a move, to push the gold and silver into one way or another, which never happened until the American market opened up, approximately 7:30 Chicago time, Central time. So I babysitted this possible move to the downside, and I got in short. It happened to be a good pick, a winner. I followed my system. My indicators worked. My system works. And toward 9 o'clock, it had a little more weakness. You see a lot of sellers coming in, selling short, pushing the price down to the downside, to the short side. And we developed a little channel here. And again, this is the short-term 2-minute chart. I have another longer-term chart coming up in a minute here. Again, another leg down around a little after 10:15ish. We rode it down. Again, another leg. You see one green bar up at this area here, this price level here, and amateurs came in thinking that they would buy and bounce up off support and the price would pop up to the upside, but obviously it did not. The professionals and the commercials kept on pushing it down, as you've seen here. An hour later, a little after 11:30, they pushed it down one more time. I got out right around this level here, about 1:30ish to 1:25ish, as I saw my other indicators, my other charts that I'm not showing right now, offered me signals, real-time signals to get out, that this thing was turning around and that the move to the short side was over. So I grabbed around 26 points to the downside, and it was a very good day for me today. It bounced down, bounced back up a little bit, retraced to the Fibonacci 23% in the after hours around 2 o'clock. Gold closes at 12:30 Chicago time, and then it pushed up and met that very famous, very popular 38% retracement right around what is that? About 6 o'clock Chicago time, and currently the price is, I have another chart you can't see on the screen. It's around 77 right now, 75. Been gyrating all evening in this area here at 76, 75, 77. So it's approximately at 11:26 Central Time right now, p.m. Central Time. If you take a look at the volume at around 10:30, shorts still outnumber the longs, pushing it down. Short sellers coming in, selling short. Looks like again, buyers try to come in at support and looking for a bounce up, and never happened. And then again, the shorts kept down the pressure on around 11 o'clock, and it kept on going after lunchtime. Again, toward the end of the market, shorts came in again, push it down one more time, and get out and grab their profits, and wait for the next session. So it was a bad day for the longs. The reason being, on the short side, we had a good housing report. Also, it looks like we're going to have some kind of conclusion to this financial cliff agreement. They're going to come to some kind of agreement, hopefully before the 31st. That's the deadline. So with those two items in the media, mass media, sellers, it was a good time for sellers to get out and wait for the next move to the upside. if it's going to be an upside. Of course, it will be as the economy is slowly being taken apart little by little. Well, that's a video for another day. Again, look at the famous Fibonacci retracements. Either later on tonight in the AM or sometime tomorrow, it's very possible to see a retracement back to 50% level to around the 81 level. So right now we're at 73, and so look for that level to the upside. If not, let's go look at another time frame here and bring in the daily chart. We went from a short term to a longer term daily chart, and if it keeps on dropping, the price keeps on dropping tomorrow or into Friday, Thursday and Friday, these are possible levels on the downside, continuing down. 61, 61 half here, 33, and then these are Fibonacci price extensions. The previous chart were Fibonacci price retracements, two different things. Here the extension under 1600, and it's very possible we could see something like that toward the first of the year if the price continues on the downside. Let's take a look at this chart a little bit more detailed, a longer term daily chart of gold futures, GC. September, October, big pop to the upside, a lot of buyers coming in, a lot of green bars coming in, pushing it up. Then again, middle of October-ish, things change, reversal. The price of gold popped below the 50-day moving average to the downside. Big downtrend here. A lot more strength from sellers coming in here. A lot more red bars, red spikes coming in, pushing the price down into November. And then as the Santa Claus rally came in for equities on the S&P and Nasdaq, you see the price of gold pop down. Also, again, with the most likely scenario that there will be an agreement signed before the 31st, you see sellers coming and selling in their gold futures and gold spot, gold bullion, and so forth. Also, the net commercial, rather I should say the commercial net commitment of traders, COT net, for commercials are pushing the price of gold to the downside. Net shorts for commercials, the big boys. Speculators and little people are pushing it to the upside. Of course, whatever the little people get in, always do the opposite of the amateurs. So in the commercials, the big boys are pushing it to the downside, as amateurs were trying to get in here on the upside back in September and October-ish. Actually, they were also trying to get in. Amateurs thought there was a big retracement coming in to the upside, and they got in here. But as you see, the price kept on coming down on gold. We're looking for the longer term retracements on gold. Look to be around 98, a little bit below 1700 and above 1700 at 38% and 50%. The volume's pretty much lower here. More sellers than buyers, obviously. You can see more red bars to the short side. Let's see what else got to say up at this chart. Also, something very important. See this blue, aqua blue wedge, two lines here, and a line down here, and you also have a 200-day moving average, a second blue line up this way. I should change that color here so it won't be so confusing. But you have a wedge here, short-term wedge. And as the price of gold gets more narrow as the time goes by, this pattern signifies that the price will break to the upside or to the downside, either way. Or it can continue into the wedge, into the first week of January. But yesterday and today, the price broke down to the below the wedge. So it broke down out of the wedge. Now it's a possibility to come back in and continue in the wedge. And we'll see the next couple of days until Friday to see what happens with the price. It's very possible we see a little bit of a bounce upward as I showed you on the short-term 2-minute chart earlier, that will come back into the fib areas, and come back into this little area here for a couple another week or two. And then again, if they do sign that financial cliff agreement, it's very possible that the price of gold will continue to the downside until those price extension I mentioned to you just a minute ago. Let's see what else can I say about this chart. Bouncing off, gold bounced off back in the beginning of November. Gold bounced off that 200-day moving average, this other aqua blue line here, and popped back into the 50-day moving average, signifying the downtrend as a lot of sellers are coming in. Commercial net COT, commitment traders pushing the prices down. That's to be expected. The big boys pushing it down. Normal. And I think I mentioned speculators were hoping, they were net long, hoping they would take advantage of some of these lower prices down here in the beginning of December to push the price up and take advantage of that. But obviously that move is not coming, at least not yet. Eventually the price of gold, in my opinion, will skyrocket upward, but it's just a question of timing, supply, demand, what the media says about the economy, fundamentals, unknowns such as wars and calamities, etc., etc., etc. All different types of unknowns will push the price. Financial unknowns will push the price of gold up, as we've seen the last 4 years. Let's take a look at the equities, the S&P, the broader market than the S&P. This is the ES futures contract, the daily chart, and you've seen since August, September, the price going into October, the price of the S&P equities popping up to the upside, to the long side, above the 50-day moving average, way above the 200-day moving average, until around the middle of October. We had a little bit of chop here, unknown what was going to happen, and you see sellers start coming in. The strength of the trend to the upside was very strong, then it started pointing downward. The yellow here signifies a change in trend, weakness that's coming, and it came within a week, and then again a week later. So anything off the 20 line, this white line here is a 20 line. Anything above the 20 line signifies strength. And you hear a lot of buyers coming in with a lot of strength. Then the trend changed to weakness, and then the sellers start coming in. Price and volume. These bars will signify price and volume. That's going down to the short side, to the downside. Okay, and the green bars signify price and volume moving up to the upside, longer term on the daily chart. And then as we get into November, the trend changed once again from the yellow signal right here. Buyers start coming in. Price starts moving up. This toward the November, right toward Black Friday, the last couple of weeks of November starts the Santa Claus, the beginning of the Santa Claus rally that's been around for 40, 50 years in the markets, and it pushed the price up of the broader equity markets, the S&P futures contract and the SPX, to the upside. And this linear regression channel proves that the price of the S&P futures contract is hugging this middle line to the upside, pushing that price up above the 50-day moving average. So far, there's no break out or to the upside or break it down to the downside yet. To these yellow lines, to the standard deviation that will be expected, possibly after Christmas or after the first of the year. You may see the price move up a little bit more higher before we see a move to the downside, and then or a move to the upside if this rally is real, if it's going to continue after the first of the year. Right now, looking at this long-term indicator, it shows that buyers are coming in lightly, but the trend is very, very weak under the 20 line. So it's really unknown right now how far this temporary rally in the S&P will move forward. Okay, I think that's it for now. I plan to do more of these videos on U.S. Treasuries, gold, of course, and the S&P and Nasdaq. I could do it on any stock that you want. I have different charts. I have a system that you don't see here that's proprietary. These are just general informational charts that I've been publishing up on my blog and Facebook. You can contact me on my Facebook page at Chicago Gold Trader, or on my website, ChicagoGoldTrader.com, or if you have my email, please feel free to contact me. Um, Anything else specific on this? I want to say one more mention of this is that's important. The U.S. Treasuries are inverse in general are inverse of the S&P. So right now the Treasuries are pushing down to the downside. Do not show you. I'm not showing that chart right now, but in my next series of videos, I will bring that up and possibly add that symbol to this and show the inverse relationship. It's important. Okay, that's about it for now. This is Ruben signing off for ChicagoGoldTrader.com, and wait the next market move. Thanks a lot.